I'm just going to say, of all the pubs that I've never been to that I want to go to, Todd from our Discord, his bar has to be near the top of that list.
I mean, I love, and this is just, and he points it out, but if you just go look there, if you look right behind his top shelf, that is a sexy poster.
Very sexy poster.
It is a great looking poster.
It's a 10, and it's also has a great personality.
No, it is a great setup, though. He's got the
pool cues, the guitars.
Yeah, and it's a nice table with the red felt, too.
That just seems like a cool place to drink at, man.
You could make some really drunkenomical choices down there.
You can make a ton of drunkenomical choices down there, man. Did you know that over $5 trillion exchanges hands on a daily basis? That's an average of over $220 billion an hour. Now, how does this much money move every single day, and why does it move the way it does? Here on Drunkenomics, two bartenders who also happen to be students at the University of Nebraska Graduate School of Business are going to sit down and drink to the global economy and try and translate it into English. So sit back, relax, pour yourself a stiff one, and have a drink with us to the comedy that is the global economy.
All right, welcome back to Drunkenomics, the drinking podcast with the economics problem. I'm not even going to check the VIX. I'm just going to say that I am the more gracious host, James Goldwater, for the 7th month running.
Okay, so the VIX is now at 2673. I think it's going to get down below 25 before it bounces back up. I'm not going to sell any call options against it. I'm just saying, I think it's going to get down below 25 before it bounces back up. So if in the month of July it's under 25 that week, at any point that week, I'm more gracious. Deal?
Well,
at any point it's under 25, then that week,
yeah, okay, I can
have that week. Okay, cool. I'm not, like I said, I'm not selling any calls against it or buying any puts. I'm just saying, I think it's gonna scoop down to under 25 at one point.
I think people are getting tired of me being the gracious one.
Yeah, I mean, I'm also, I'm in that line, so.
Me too. But wait, that makes you not only less gracious this week, but also.
Okay, that makes me Aaron Wong, that's me. Okay, so glad you all can join us. Hopefully you have a nice stiff one in front of you, unless you're about to drive or do something responsible. Please drink responsibly, is all I'm saying.
Then, keep it drunkenomical, which is knowing that there's an appropriate time and place for everything.
Absolutely. Speaking of appropriate times and places, a really appropriate place is our social media.
Absolutely, which is Drunkenomical on Twitter, MySpace.
I wish.
No,
my favorite.
Twitter, Metaverse. That's instant Facebook, which is at Drunkenomical, DRUNKEON. DRUNKENOMICAL. DRUNKENOMICAL.
There we go. That was excellent. Wow, that was great. Yep. Yeah. We're also on LinkedIn as well. So, that's our longer form stuff. And feel free to add either me or James on LinkedIn at any time.
And then you'll find the invite there to join our Discord, where you can jump in with everyone else that jumps in our Discord. And you too can enjoy, right now, just Todd's killer bar.
I mean, that's the pub of the year. I mean, if there was a restaurant local. I mean, there's bars that win those awards for best local bars.
Yeah,
in Colleyville
this week's bar of the week or whatever.
Let's highlight a bar in Capel, Texas, and it's this random bar. And it's wow, this is a cool little bar. They have this unique feature. They have a dartboard that shoots the darts back. I don't know. I'm making stuff up, but whatever. That's Todd's bar. It's cooler than all those bars that you would see in those magazines.
Exactly.
Literally. And you could see those pictures for yourself if you join our Discord. Free to all.
Yep.
Free to all.
Exactly. You join us there. We did finally, it's been a while since we've gotten questions just kind of more fun questions instead of just hey, you explain this specific graph to me or things like that. So we did get some good ones though. The first one did come from the Discord where you could ask us, where you could just jump in and ask us the questions. Mm-hmm. I guess. So it's from Hanson, who's asking us, do we have any thoughts on the California inflation relief check?
I mean, I have my thoughts. I want to hear your thoughts too, but if you want to know, I'll go first. I'll just say, I feel like it's a dog chasing its tail, or I don't know. Inflation is caused by money supply going up. That's one of the causes I would say of inflation. And, here we go, more money supply going up. And there was someone on Twitter that said, well, isn't it money supply that's already out there? I'm well, not necessarily. I mean, it's the federal government that's sitting on it, that's not doing anything with it.
Well, in this case, the state government.
Oh, sorry, not the federal. Yeah, the state government. So, sorry, I'm drinking beer.
I know,
but I'm just saying, it's. I think state issuing money to people, that's M2 supply, M1 supply going up. And to me, inflation relief and you're fanning the flame. That's my opinion.
So it could be a really good bet if California is absolutely convinced that it's a one-off, that inflation will be under control before they need to do another $1,000 check. On the other hand, I think there's it causes some concerns when it's all right. At what point do you end up with states just saying, we'll just give our No, there's theoretically an outcome eventually in the economy when everything's been automated that you just give people money to live and just like, here you go live your best life. You don't have to work. Yeah. No, you make a valid point. Does it do anything to stifle the inflation in California? No. Having said that, does California have control of its own fiscal policy? Also, no. So it's kind of. It seems to me that they're trying to.
They have some control over their own fiscal policy.
Well, they can't control the actual supply of dollars.
That's what I'm saying. But they have some control, right? So
yes, they don't have there's no Federal Reserve of Cal. There's no Golden State Reserve or whatever. Yeah. So my opinions are mixed on it. I don't know. It's. I imagine that if you're one of the people who's been drastically affected by inflation, especially if you're in California, this is a useful thing. Now, the real thing is it?
But does it make everything else? Is it going to make everything else more expensive? Because people have extra, an extra $1,000 to pay for everything.
Yeah, so you're taking the sting out, and while that helps someone who might otherwise be getting priced out of certain food markets or certain other markets, which you don't want. You don't want that for your citizens. At the same time, are you then perhaps potentially making a system that reinforcing the issue and forcing more people out, and perhaps the medium to long run? And the answer there may also be yes. And it's a mixed bag. It's like I said, if this is to solve a problem that California legitimately believes will be solved within 3 months, then maybe $1,000 now to pave over something that's being brought into control. I understand.
But that's kind of like what's happening with the stimulus checks, right? Not that stimulus checks were the worst things in the world, but because I do think they helped a lot of people.
No, they were demonstrably very good.
I don't want to say demonstrably, but they were very good. And I think
they kept the economy functioning at a time when people were not working.
Right, but there were also a lot of other programs that kept the economy functioning as well. Not just the stimulus checks, but of course, regardless, all those things put together kind of created this cocktail of this inflation, stagflation that we're seeing right now. I think that was part of the cocktail. Not obviously, it's.
I'm not sure that $3,000 from a year ago is still is causing inflation now. I don't believe that's the case.
But I think it's like if inflation is in Manhattan, the $3,000 stimulus checks, it's probably like the vermouth or the bitters, right? Like the core of it is still everything else.
Okay, I'll accept that.
Yeah, it's like the rye is the rye. The 2 ounces of rye is still
okay, I can see where it's like you put some bad bitters in, so it's like, well, this whole thing,
right? Well, yeah, exactly.
It's an issue, but these bitters.
Well, but I'm saying if inflation was the cocktail that is the Manhattan, right? The rye is the MBS purchases, the $9 trillion balance sheet, right?
Then I would say the vermouth is
the stimulus checks, right? Because that didn't help.
I wouldn't even say that. I'd say the vermouth is probably the actual supply chain problems.
Okay, fine.
And I'd say the bitters would be the
and the garnish, I guess, would be the
stimulus checks. Honestly, they're the cherry on top.
Well, it's the thing that when you bring the glass to your face, you smell it right away. It's the first thing you notice.
Yeah, right? It's the first thing people notice. It's the thing people might get most angry about. But trust me, it's not the real issue.
Because nobody likes to think about the $9 trillion balance sheet. Nobody likes to think about the MBS purchases, and nobody likes to think about the global supply chain issues. And I don't know.
Of course not. Especially not homeowners who are sitting here in their house, which is now valued the highest it's ever probably been valued, and they're going, "This is great. Why would I think this is bad news?"
Right. Exactly. So there's that on the California stimulus checks. We got another question too. What was the other question?
It was on Twitter, it was.
Oh, there it is. I just saw your episode. Well, thanks for listening. It was the Psy Guy.
Cheers.
Cheers, man. Seriously, I enjoyed drinking along with you. He wanted to know what you thought about countries with negative interest rates. Do you think it was a good idea, bad idea? So speaking of which, a big ingredient in that cocktail that is inflation, very low interest rates for a very long time.
Absolutely. Anyways, why don't you go ahead? Let's talk to the Turks about it.
Yeah, let's see what they think. But anyways, yes,
we won't see what they think because what the guy in charge there thinks is just wrong.
Yeah, well, and he'll fire anybody that disagrees with him. But anyways, that's our tangent. Do you think negative interest rates was a bad idea? I'm paraphrasing. What do you think about the policy of, referring back to negative interest rates?
Policy as a whole. Okay, so to answer this, I was looking at when the very first nation or central bank to really do negative interest rates was, and it was in the 70s. The Swiss did it.
Okay, so why do they do
for
it?
About 6 years. For 6 years, they had negative interest rates on their bonds. So the premise of negative interest rates is that you've got a deflationary problem, right? So if inflation is combated by high interest rates or raising interest rates, deflation or lowering prices, is combated by you lower.
What is deflation? Let's define deflation aside from just saying your currency has higher buying power or is increasing buying power.
Yeah.
Define the other side of that. Why does that happen? Why does your money have more buying power?
So essentially, what you're seeing that asset prices are decreasing over time. So your purchasing power increases, right? So you can buy more with less, or you can buy more with the same, or even with less.
But why would that be a bad thing?
It's the mirror of inflation, right?
Yeah.
It tends to signal recession and hard economic times, right?
Yep.
So that's why you see a lot of central banks and a lot of business or a lot of economies would respond when they start to see deflation. They go, "This isn't good because we're seeing less money out there for one of multiple reasons, or we're seeing so much production that there are going to be issues, right? So if someone floods the market with apples, a lot of people are going to a lot of farmers would then pull out of the apple market.
Yeah, exactly. And also, a lot of the farmers wouldn't be making any money. They'd be operating at a loss.
When the price of your commodity is decreasing or plummets down like that, you tend not to grow it. And more importantly, a lot of farming is done on margin. There's very low margins in farming, especially when you take into account the value of
profit. You're talking about
the price of the farming
margin,
equipment,
right? So
profit margin. Yes, I'm sorry, profit margins.
It costs about this much money. Like, let's say it costs $3 to produce a bushel of corn, and normally it's around $4 a bushel. But you also have to pay a farmer or whatever, or a ranch hand, or I don't know. I don't know anything about farming.
Or I have to be able to. So say it like
water,
just the fertilizer,
oil,
all that. So the issue then that you run into is this farmer is also probably heavily mortgaged on or has a pretty serious note on all their farm equipment, or they have to lease the farm equipment, right? So they have to borrow farm equipment from someone else. So you have and it's very expensive, the equipment.
Yeah.
Then what if they have mortgage on the land because they've expanded their land to grow more, right? So when you start to see the asset prices fall, what you then start to see is, well, if what I'm selling if the price of what I can gain is shrinking, my take home is less, I can't expand my farm to produce more. In fact, I may have to start selling off parts of my farm because I can't afford to keep them all.
Yeah.
And that's when you start. So it's that we saw it in 2008 is once the prices started to drop, you saw people starting to dump out because they couldn't maintain their position.
And it's, and if you really think about it, it's not a big deal. It's only the food we eat, so it's not,
it's not
like it's a really important.
So that's what you start to see with deflation. So that's kind of how this idea of deflation is a bad thing, is that when you start to see these as prices drop, you realize, well, a lot of businesses, you get to a point where, okay, if the prices start to drop below the break-even points, people and businesses end up leaving the market.
Yeah. Well, essentially you have deflation because no one's spending money. So they keep lowering prices of those things to try to get you right. Because if you're selling 10 gallons of milk, but no one wants to buy it, it's like, all right, fine, I'll offer to sell it lower.
I now just need to get rid of it because my holding costs. I need to get rid of it,
and it's going to expire. It's not like it's like it's going to last forever.
So you then argue, well, something's better than nothing.
Yeah. So same with oil, same with any commodity that you can eat, right? All that stuff. They expire. So like you got to keep lowering the prices, and that's how you get deflation. On top of that, if you have deflation, normally speaking, that means your currency is stronger. That's not good for that's terrible for exports.
Trade.
Yeah, for exports.
Yeah, it's not great for trade. Yeah. You can purchase more foreign goods, but people can't afford your goods. So then you're back to your pricing yourself out of other markets.
So other countries they'd rather buy things from other countries instead of your country because it's like, well, your currency is too strong. And it's because your economy sucks. So it's like, it's kind of like a double. It's a really bad situation to be in. Deflation, stagflation.
But at the same time as I say, like, deflation is bad, there are some places where deflation is good. So like in computer programming, we think deflation is a good thing, right? So it is now cheaper to get more computing power. That's a good thing.
That's also an industry I don't know.
Well, I just mean specifically that, a computer now is less expensive than a computer. Your cell phone now has substantially more computing power than NASA did when it put a man on the moon. Oh. And your phone costs less than a computer did. Filled up a whole room.
Yeah, but
right? That's luckily, when I say deflationary pressure in certain specific fields, we think that's good.
Yeah, but luckily for tech, the profit margins are substantially higher than farming
and are different. It's
different, but. This is a really long-winded answer to the question.
It is. It's a good one. Right. So you'd go to negative interest rates. So Germany has historically done that. They're not at negative interest rates right now. I think the lowest I saw was 0 for them right now.
Yeah,
or at least Japan. Their current bonds. I'm sure they still have some of their bonds that have yet to expire that are still out there that have negative rates on them.
I mean, the ones that were issued, like the 10-year bonds that were issued 5 years ago.
A 10-year bond from 8 years ago. Yeah. So what happens then is when you have a negative coupon or you see that negative rate on a bond, essentially the country is telling you,
save your money.
You buy from me.
Save your money.
You're buying from me the right for $1,000 in the future, but actually, I'm not going to pay you that. You give me $1,000 now. I will give you $900 back in the future at the end of whatever period is. And they're saying that's what we'll do. That's the risk-free rate, is that you're going to lose money.
Yeah.
And then you would go, that's a bad idea. I don't want to do that. And then the government's going, yes,
don't
spend.
Do it.
We want you to spend. So it's trying to compel people to spend. It's essentially use it or lose it at that point.
But it's also, if you want to take on a loan, to start a business with negative interest rates, that's a perfect time to take on a loan, because technically, if you took a loan from the government and they paid you that negative interest rate, or you paid them the negative interest rate, they're paying you. I said that backwards. But if you took on a loan to buy a house, think about what would happen if your mortgage rate was negative 0.25, right? So you're getting paid to borrow money to buy a house.
Yeah. You still have to make payments on the principal, but you don't have an interest payment on top of that. In fact, it would probably, the way it would operate is they'd shrink your principal.
Yeah, exactly.
So normally your payment would be $900 a month, but because of the negative interest rate, it's only going to be $875.
Yeah. And obviously, a bank would never do that, right? A bank would never loan anything, but because they're getting a negative interest rate
from their lender,
from their central bank,
they can turn around and offer extremely low rates.
So that encourages you
consumer.
That encourages you to start a business, hire new employees, pay them money, right? So that's essentially just So that's why they do it. I still don't. To me, negative interest rates just make no sense. But
it's a break the glass plan.
Yeah,
it's so the big country that's affecting, because I imagine that our listener was paying attention to the fact that Japan still has negative interest rates.
Yeah,
and the issue is that leads to problems in the future, which is you have less capital to play with, and so it's kind of like when you lower interest rates, the next time you run into an economic issue, you can't really lower them as much because you have less space between you and zero.
Yeah, well, because the flip side of the coin too is so why would you invest in Japanese assets if they have negative interest rates? You know what I mean? So they're not going to get any foreign investments.
Why would I buy a Japanese house or building now when I fully expect it to be less expensive next year?
So that's what I'm trying to say is they're not getting any foreign investment, and because the currency is hypothetically strong. I mean, obviously right now the US dollar is what's really powering through, but because of their deflationary pressures, their currency is technically stronger. So you're doing these negative interest rates, and what you're doing is you're trying to get some sort of you're trying to get imports, right? Exports.
Yeah,
you're trying to
get exports. Goods.
Yeah, you're trying to get people to buy stuff from Japan, but at the same time, nobody's going to invest in Japan because they have negative interest rates.
Now, on the plus side, they'll still buy your stuff. So if that's all you want them to do, that's fine.
So I think it really just depends on what your goals are. Does it make? To me, I still don't think it makes sense. But I don't know, maybe this is this modern monetary theory, this MMT, maybe it's just so far ahead of me that I have no idea what I'm talking about.
Yeah, well, it shouldn't be. But from a sociological perspective is that, even with essentially free money, there aren't a whole lot of Japanese, there are not people in Japan who are taking that and running to go buy the next big thing, who are running to make that next big investment. There seems to be a greater... There seems to be a more disciplined approach.
I think it's just the animal spirits taking over. They keep saving, right? Because the economy is seemingly shrinking. So if they keep saving, which you should do when the economy is shrinking.
Yeah, as the economy shrinks like that, as they see their deflation, their buying power goes up. So they hold onto their money. It's worth more tomorrow than there's no. Yeah. I don't need to buy that today. I could buy it tomorrow for less money, or I can buy more tomorrow for the same. And that's fine. But eventually it can't. It's not sustainable.
Yeah, I mean, we might have over answered your question. So I'm sorry if like now you're just overthinking everything now, but that's just I don't know. I get drunk and I overthink everything. That's just what happens.
In a too long didn't read. Just that really fast version is just negative interest rates are to penalize people for saving to get them to consume.
Yeah.
There's a time and a place for it. Obviously, I don't know if 31 years is. I think that might be too long.
I agree. I mean, but that's specifically for Japan, Germany, kind of the same deal. They've been at it for like I don't know how long, maybe a dozen years. So I don't know. I don't like it. But with that said, I do want to talk about other things that I don't like, such as I guess the JOLTS report was something that I didn't like it, but I didn't hate it, but I also didn't like it. Right. So was that a bad transition? I feel like it was. But
no, let's do it.
Okay, well, thanks. I appreciate it. If you like the transition, then I'm cool with it. But yeah,
it wasn't jolty at all.
Oh man,
I regret nothing.
As you shouldn't regret nothing. But with that said, obviously everybody knows July is always a pretty big month economically. Well, I mean, I don't want to say it always is, but this year really is because
the July report of June's numbers.
Yeah, so the July report of June's numbers, there were a lot of earnings revisions that took place in the last quarter. We'll see later this month and into early next month how those panned out as the earnings cycle comes out. But more importantly, JOLTS report came out for the for the month of June. There's also going to be GDP data that's going to let us know if we're officially in a technical recession or not.
The answer is yes.
The answer is most definitely yes. I can't imagine that they come in positive. There's just no way.
Yeah, I'd be shocked to see it.
Yeah. But that's in what? So when does that come out? July 25th or something like that? It comes out later this month.
Yeah, 25th.
I think it's 25th. That's a guess. But 24th, 25th, or 26th, one of those 3 days. It's one of those 3 days. I know for a fact. But this week, it was the JOLTS report, and it wasn't like bad. It was better than expected, but then again, I don't like who's expecting anything. I think.
I mean, let's see. What did we see? We saw job openings of. What was it, 11 and a quarter?
Yeah, I mean, it's like 11.3, 11.4-ish, or 11.2, 11.3-ish, sorry.
Yeah, but they were expecting 11.
Yeah,
and then,
which I'm like, shame on you for having expectations. But
so it's above expectations, but it's below April's number, which was 11.4 million job openings. That was really slow.
But I still feel like it's more of just like in context of April and March, right? I mean, we expected job openings to decline, and that was normal because the economy was contracting. March was a record. I mean, March was the most job openings we've ever seen ever.
It was nearly 12. I mean, it was
yeah, I mean, that's insane.
12 million.
Yeah, it's insane. I mean, granted, population higher now than it probably ever was, but 11.8 million in March, record high. It's slowly declined, but it's still about 1.9 to 2 job openings for every person that's looking.
Yeah, it's because I remember looking at it and just concluding that's 2 to 1.
Right.
Every person looking for a job, there are 2 jobs available. Which is why it's funny that you've got not quite 5.95, so nearly 6 million people who were considered unemployed in May.
Yeah, so it's pretty much 2. Like let's just say 6 million and almost 12 million, right? So it's pretty much 2. The nice thing is, so the quits fell to about 4.27 million. So I guess less people are leaving their jobs. But I mean, my thing is, it's still the labor market is tightening, but not by much, right? I mean, 11.24 or 254 is still a ton.
Well, the next thing is, and it's this whole why are quits falling? Well, our businesses finally deciding to do things to retain workers.
Yeah,
because I suspect that's what's happening.
I think that is what's happening, but there could be a different side of that too, where workers are looking at their current situation and going like, okay, what's the alternative? Is it better or worse than me staying here? Which I don't think that's the predominant thing. I don't think that's happening nearly as often. I hope it's not, at least.
Yeah. Let's see. I mean, because it's still below pre-pandemic numbers, or the job openings are still not job openings, but
the amount of workers that are out there. The amount of employees.
Yeah. So we're still under by nearly 500,000 jobs since. Or compared to pre-pandemic. So we still have fewer people working than we did before the pandemic, but it's a much happier market if you're someone looking for a job right now. I know a lot of people probably are wondering the question, well, if there's 2 jobs for every person, why isn't there full employment? And the answer to that really boils down to it all depends on where the people are and where the jobs are.
It really does.
People have the required skill set to do the jobs. Because let me tell you, I'm a decent bartender. I have an accounting education. I don't know how to drive and I know how to drive a tractor, but I don't know how to drive like a forklift. I don't know how to press aluminum. I don't know how to. I'm not a surgeon, right? So it's like, okay, if there are 2 million doctors' jobs, I'm not qualified to be a physician in any of them, so those are going to remain open.
Yeah, and think about it this way, like the pilots, right? So like the airline industry,
they're offering
a ton of job openings there. I mean,
they're offering three times the normal salary right now to fly on days off.
Right, exactly.
Cancellations and delays.
Yeah, it's kind of weird. I mean, the airline industry has kind of been a wreck in general, and a lot of old pilots. Yeah, and a lot of pilots have. I mean, it seems like if you're a pilot now, you want to fly private, so. Which I mean, honestly, if I was a pilot, I'd probably want to do that too. But yeah, it's kind of like going back to what you said. Is it depends where the jobs are. I'm not qualified to be a pilot, right? Like if I was, it's it's.
So I guess when we say like where the jobs are, I mean both physically where they are they where you are, and then next. Where are they? What industry are they in? Are you qualified to do them? And if the answer is not here and no, I'm not, then there really aren't jobs open. Then it's not really a job that's open for you. It's just a position that wants to be filled. But so that's I don't know.
Well, I mean, to me, I don't like seeing the labor market tightening, but to me, I feel like it's needed to tighten. Just because, and that sounds really bad. That sounds like a really negative thing to say, but I feel like it's just because. I remember when it was first like 1-to-1, like back in like 2017 or 2018, when it was one job opening for every, worker available to work them. When that first happened, like the big story was like, what are we doing wrong? Mm-hmm. Like, are we training our youth wrong? Like, what's wrong with our education system? Where are the job openings? And at the time it was like a lot of blue collar work. Like stuff in warehouses, forklifts, things like that. Those were where the job openings were. Yeah,
which is, I mean, that's why that's kind of the analogy I go to is there is there's a dearth in this country of a lot of blue collar workers, and that's we've talked about it in the past.
And you and I are on the same page. Like this is one of the things that you and I are actually on the same page on. Is like I think our educational system, I don't want to say has let us down, but I think a lot of people that get a college education. Don't want to necessarily work in a warehouse. No, because you don't need a college education to do that. Like
it's a lot of people have listened to the old like go to college you'll be fine. Well, it's what I call degree inflation, and probably other people have too.
I've called it that too.
It used to be it used to be that when you had a high school diploma, you could go and just like walk to a factory and get a job, or go to a place and be like, I graduated high school, I'm here, I'm ready to go. And then it became, okay, no, you need a bachelor's degree to go and do a lot of things, or it was preferred.
Right.
And then after that, it was, okay, well, since so many people have bachelor's degrees, well, now you need a master's. And then now, on top of that, you need certifications on top of your master's in these fields. It's like, well, hang on. And now in some fields, you obviously do need that education. I would say that if you're going to be an accountant, a therapist, a doctor, going to be a physician, these are specific fields. You could learn it on the job, but it's a hell of a lot easier to teach you the basics somewhere else and then bring you in and show you the application. Right. Whereas like to do sales, you don't need a degree to do sales. You just need the ability to sell.
The skill set. Yeah, exactly.
Which I realize I say that dismissively, and I don't mean that at all. It is.
Well, I mean, it's a
career field.
Yeah, and if you're good at it, you can do really well. But it's also like, okay, what do you need to have your own roofing business?
Absolutely.
And those guys make a ton of money. So I don't know. I think I do think there is and was an overemphasis on the importance of getting a college degree. And I'm saying that as someone with 2 college degrees. So, So
I know that feeling.
I'm telling you, it's overrated. There are people that make a lot more money than I make and are far less educated and have been making more money than I've been making for a much longer period of time and will continue to make more money than I will ever make. So that's all I'm saying, right? Fastest track to being a millionaire, as you and I both know, is being a truck driver. But yeah, in other economic news, should we start talking about capital markets now?
I think, I mean, it's a great point to jump because we've got.
Because I mean, it's the whole Dow theory, right? I think, according to the markets, we're in a recession because we had 2 straight quarters, back-to-back quarters of negative growth in the stock market. The Dow theory, as was defined, I saw this on TV today, so don't even give me too much credit for this. But I saw this on TV on CNBC when they talked about the Dow theory, which means the stock market leads the economy by 9 months. Everything is priced in, right? Which is why we had earnings revisions, a bank stress test not too long ago. I mean, that all happened in Q2, which I think was just the market's way of saying, hey, we're in a recession, in case you guys are wondering. We're consolidating right now, but we're in a recession.
All right, so the last few weeks, it's all made sense for me where the markets they have their up days, but as a whole, they've been trending down. But this week, so the 5th and the 6th, markets have started down, but then have trended back up.
Yeah. Well, I mean, last week was kind of that way too.
Well, last week ended down. I guess this week still can end down.
Well, but my guess would be there were a lot of up days last week. So wait, was the question? You sound like you're going to ask a question.
Well, the question is this: why do you think that the last 2 days, maybe this week, are trending up? What, in your opinion, causes these upswing days?
Okay, so this is me answering. I'm not an expert trader. I'm not an expert market timer. I don't have a CMT, even though I wish I did. I wish I was cool enough to have CMT, which is a chartered market technician. To me, that's such a great certification. I think that's such a cool certification to have. I don't know. I think anytime there's a bear market, there's always a few cycles in a bear market, but it starts off with peak, trough, dead cat bounce, and then capitulation. That's to me the cycle of a bear market. And honestly, I think we're just we're in that bear market bounce. I don't trust every rally that I see. I mean, the last 9 trading sessions almost, it seems like markets have opened down or opened up. And every time it opened up, it finished down. And every time it opened down, it finished back up. I mean, literally, you look at the charts for the last 9 trading sessions.
Yeah, it's not far off.
It's every single time it's been like that in the last 8 or 9 trading sessions. So yeah, to me, I just think it's the market's they're trying to find a catalyst, and because they're still trying to find a catalyst, there was a bounce. A couple weeks ago, 2-3 weeks ago, maybe.
Yeah, there was that bounce.
Yeah, I think it's just, to me, that's the bear market rally. I think personally, there's going to be an even bigger rally. I think it's just, I don't know what the catalyst for the rally is going to be, for the short term rally is going to be, but I do think at some point we're going to have that capitulation phase coming up. That's just my guess. I'm not a CMT. I'm not an advisor. I'm not any of that stuff.
But that works for me. That works.
That's
for me.
My only reason.
Because I remember in 2008, everyone knew it was a problem, and and markets had been trending down for months. Yeah. It wasn't. Everyone thinks 2008 happened overnight. No, and it did. But the initial one, it got really bad overnight. But before that, it was a prolonged downtrend, and people were like, well, there's still ways out of this. There's still ways out of this. And then but it wasn't until, and I kind of do it as there's the two, the beginning of it and the end of it. And the beginning was when Congress failed to pass a bill to deal with it, and that's when everyone went, "Oh my God, they're asleep at the wheel." Well, and that was the catalyst for down.
Well, and so this is the thing is, if you look at if you can look at the Dow chart from 1929. 1929, it was, the first initial reaction to the crash, which was, that bear market cycle, the peak, the trough. And even in 1929, there was a bear market rally. And this is before algos. This is before obviously, right?
Yeah. There was JP Morgan and he and the rest of the guys got together and said, okay, let's go calm the market.
Yeah. So then they went in, they bought the dip. And then next thing you know, there was a nice little rally. And then, wouldn't you believe it, right when the prohibition ends, guess what happens? There was capitulation. So,
well, I have a feeling that there were some people who, as JP Morgan and the rest were buying the rally, they were like, "I'm in this to margin. I'm up above where I bought in.
Break even, yeah, and then just all right.
Yeah, I could break even or make a little bit of money, and I want out because I want off this ride.
Yeah, but the psychology is still exactly the same now, right? It's it's happening right now.
Not changed.
So 2008 was the same. 2001 was pretty similar to 1987 was pretty similar. 1997,
87,
yeah.
87, 99.
Yeah. 2003.
Whatever we're going to call this.
Yeah, whatever we're going to call this.
As he says, so, fat cats and starving dogs.
Yeah. So, to me, that's it. I don't know. I don't know what the catalyst for it is. There's always a catalyst. I think it's the whole earnings revisions and, did we price in the rate hikes yet? Have the banks went through the stress tests of higher interest rates? And, interest expense is going to be more expensive for them because that's essentially what happens when interest rates go up. Interest expenses
suddenly we see greater expenses, lower profits.
Yeah, but it's also they get to lend money out at higher interest rates too. But the demand for money is also going to be super low.
Not super low, but just lower.
Lower. Sorry, I speak in hyperbole a lot when I'm beer goggles. But yeah, so whatever that was, whatever the catalyst was, I think it was earnings revisions, and everybody thought it was priced in. And then on top of that, okay, well, oil is coming back down. All the commodity prices are coming back down. So it's like, well, maybe the rate hikes are working. Maybe Biden's tweets are working. I don't know, right? Whatever. I'm joking, but like I'm just saying.
I know.
Maybe those things are working. Like maybe that's actually inflation peaking. Yeah. I don't think it is, but maybe it is.
Neither do I. But it's okay. So then let me ask you a second question.
Yeah.
Right? We've kind of talked about this a little bit, but so the Fed has a meeting this month. They have a meeting at the end of July, and then they have a meeting scheduled for September 21st.
But no, wait, 21st? I thought it was later than that.
It might be the 20th.
It is 21st. Okay, yes, you're right. It is 21st. You're right.
It's it's July 20.
They're meeting
July 26th and September 21st.
Yeah, they're meeting on the 20th through the 21st. So every Fed meeting is always they meet on the day before and the day of, and then the announcement comes out. And, you know, if it's not like, so this last meeting was so stupid.
Well, they telegraphed a lot of things.
Well, yeah, but the last meeting they said, okay, 75 basis points. Someone leaked it. I know that the Fed wanted it to be leaked because it's the Fed.
Yes, they like to telegraph.
Yeah, and I think they wanted it to be leaked so the markets could price it in quickly. And so I think it's childish. But anyways, yes. So
you shouldn't have a pre-release release. Everyone gets to find out at the same time.
Yeah, that's childish. But anyway, so yeah, the September meeting is the 20th to the 21st, and then on the 21st at 1:00 is when they do the press conference thing. Okay, what was your question? Sorry, I went off on a tangent there. That was me.
All right, so August, they always take it off.
Yeah,
I think they have to have an emergency meeting, and I think they're going to have a meeting in August. Okay. I don't think they can. Right? Would you agree they can't wait 60 days?
No, I don't know. It really just depends. I mean, like I said, this is a big one.
Well, okay, so it does fully depend on the July.
It does depend on
the June numbers that we find out this month.
Yeah, and it also depends. The earnings cycle is going to be huge too, right? Did the revisions work? Did they make sense? What are retail numbers coming in? Sentiment.
So when the retail numbers are down, sentiment's bad, and when you start to see the guidance go to shit.
But what I'm saying is, if retail sentiment is even lower, do you want to call an emergency meeting in August to raise rates and crush retail sentiment even more and at a faster pace?
Yes.
Okay, fair enough.
My answer is yes.
Fair enough. I'm not disagreeing with you. I'm just saying.
Because if they're serious with what they said today in their minutes, which was hey, inflation, gonna deal with that.
No, that's our number one priority. Yeah.
And they've got to. Then they can't be like, oh, everything else is bad too, though. It's like, well, do something.
Yeah.
Because nothing isn't a legitimate option.
Yeah, exactly. Real quick, I do have an answer to your question. I'm going to grab another beer.
It's a great answer.
It's in the freezer, so sorry.
Yeah.
It's chilling out, man. All right, I'm back, but I just didn't want the beer to burst.
No, that's fair.
So, yeah, but no, my thing is, yes, I do think, bottom line is, what do I think is going to happen? I think they're going to see the July or the June numbers, the Q2 numbers, and they're going to be like, yeah, we got to do something about this. Stagflation is one of those things that, I mean,
it's a problem.
Stagflation is kind of like a flat tire. Like when you get it, you want to get rid of it quickly, and you don't want to have the donut for a very long time. That's, but I don't know. That's kind of a bad analogy. If you don't want to drink to that, no. But I mean, I'm drinking to my own analogy. But whenever an economy is in that stagflationary period, you want to get out of it as fast as you can. And the Fed can really only control the money supply side of things. So it's like, okay, let's shrink that real quick, get rid of inflation, and then let the chips fall where they may, which is kind of cruel, but
it sometimes works. And generally speaking, one wants an economy to have as few interferences as possible.
Yeah, I guess that word works, but. So, I mean, I wanted to ask you, like, what do you think? Like, why do you think there was a bounce or some sort of consolidation period in the last 2 weeks? Why do you think that happened?
I think some people are legitimately buying the Fed's response. I think they're buying in. I think there's others who are.
So you think people think that inflation might be peaking, and that's encouraging them to go?
You got some people who think, okay, they're clearly taking strong action about inflation, so it will peak eventually, and I don't want to be late to the party on that one. So that's part of it. I don't know if I agree with that. I think with that reasoning, but I think that's what some people are believing.
I still feel like
another one for me.
I mean, I'm sorry to pick apart your thing, but your reason.
No.
But like to me, it's still kind of missing the mark in the sense that like there's still supply chain issues. There's still really weak consumer sentiment. But at the same time, it could, like, to your defense, if there was inflation peaking, it's okay. Well, that's going to encourage me to sell my oil stock, right, which is an inflation protection kind of security, and turn around and buy, I don't know, retail stock or healthcare or I don't know, whatever other tech. Tech, for instance.
No,
right?
and so that's what I think is happening. I think you're seeing some rotation into.
Okay, so that makes sense. Yeah,
yeah. So it's not like across the board. I think you're just seeing rotation and people buying, and you're seeing people buying into certain industries at what they see as a discount, and so that's what's. So I think that's part of it.
And the reason why, I feel like a lot of people are wondering, okay, well, it's a rotation. Why does that mean markets are going up? If it's just going from one asset to another, why does it mean markets are going up? Well, because oil and energy and those inflation protection names, they don't make up that big of a percentage of the market. You want to know what sector makes up a big percentage of our markets? Tech. So if there's a rotation out of energy into tech, it's going to boost markets. That's so. Yeah. Anyway, so what was your second reason?
The second one is the second reason you're seeing people kind of buy in. I think there might be some people out there who are thinking to themselves, "I've seen it go higher than I've seen this value. I've seen the stock valued higher than this. I can buy it now." And I can wait. So I think there might be some people buying to hold.
Yeah. I'll buy the dip now because I know 5 years from now or 10 years from now it's gonna be higher, or trade at a higher multiple.
And they see it as and I think they're seeing that as a potential for growth, for upside growth. And I think another one is, and this is kind of only just now occurring to me, is that you are probably seeing some people dump out of crypto where they can.
Nice. I think that's a very valid reason.
And then NFTs. Go into something else, right? Because unless you have your money in what is it, Three Arrows, Voyager Digital, or
what was the last one? Oh shoot, we talked about it last week. I don't remember.
Yeah, but there's two. So there's the two major funds that have frozen or platforms that have frozen the wallets and the accounts. You can't withdraw or transfer your money.
Gosh, I can't remember.
And then there's the one hedge fund that's backed by crypto that has declared bankruptcy. Or it hasn't declared, but it's filing for bankruptcy.
What did we talk about last week? Which one was that one?
Oh, Celsius.
Celsius that's what it was. Yeah, that's right. They had the lawyer come in and restructure their finance
or their bankruptcy. A lot of their positions. But Celsius and then Voyager Digital, they have both now frozen the accounts and blocked people's ability to withdraw their money and or sell.
God, that sucks, man. I'm sorry. That sucks.
So like I said, so if you are able to sell your crypto, I think you're seeing people who are selling crypto and going into something a little more tangible. When you see, it makes sense because if you're sitting on something that even at the end of the day, theoretically, I'd get a few cents in the event of a total liquidation. With crypto, it's lost 70% of its value in the last 6 months, 7 months, 8 months.
Well, I mean, think about it this way: so Coinbase, which I think is the number one, Coinbase and either Coinbase or FTX, or maybe even Robinhood.
One of them.
One of those three. They're the biggest crypto brokerage house in the country. One of those three. I forget what it is. I don't care enough to go look it up, but they like all their stocks are down. I mean, I don't think FTX is publicly traded, but Robinhood stock is getting crushed or has gotten crushed. They bounced for a little bit based on news that FTX was going to buy them out. I haven't heard the latest on that.
I don't. FTX hasn't made an offer. All FTX has said is there were discussions internally about whether or not it was a good time to buy.
According to the Dow theory, that's good enough. That's good enough, man. I'm just saying.
Well, I remember a time when all the guys that Hertz said as we're declaring bankruptcy, and people were like, "Ooh, buy that stock."
Okay, because what if you can get ahead of it, right? Just saying. What if you can?
Well, yeah.
So I'm just saying. So that's why Robinhood stock bounced. Coinbase, God, that poor company. Which I'm not gonna lie. Like I don't think Coinbase is necessarily a bad stock. I'm not saying you should buy it because I'm not giving financial advice. I mean, it could certainly go down to $35 or even lower. But I saw Coinbase and I was like, this is a much better company than I thought it was. Like when I first looked at their financials, I was like, wow, this is a much better company than I thought it was. But don't have any exposure to it. I don't think I ever will. And their stock has gotten crushed too. And it seems like every week a bank is coming out and saying, "Hey, we're downgrading Coinbase." Well, and it's only because of crypto.
Well, when you get something that's based on nothing,
exactly. I mean, Coinbase, they do a lot of other things too. But I think they do. I don't know, but Coinbase makes their money from order flows because they're a brokerage house. That's what they do.
Yes.
So There's that, but like, when crypto is diminishing, I don't think their order flow is necessarily as valuable.
No, and you don't. And again, it's what you're seeing buy and sell, not necessarily any sentiment going into a stock. You're seeing buy, sell a thing.
Right. Exactly.
It doesn't do you a whole lot of.
I mean, so what do you think? Do you think, like, ultimately at the end of the day, do you think there's going to be the capitulation phase is that ahead of us or is that behind us? What do you think?
I can't remember for the life of me a part of this where everyone has quit, where the market has finally just gone, yeah, fuck it, we're inflated. So I think it's got to still be ahead of us, and for no other reason than I don't remember. Then I think there's a lot of potential in the next 3 months for something stupid and inane to happen, but it will be enough for everyone to be like, you know what? Let's get out of this. Let's quit this poker table. Let's go. We'll come back to the table later when I have my head on straight.
I'm trying to think of what the lows are going to be, and some people have suggested that it's the 2020 lows. That is a stretch for me, in my opinion.
I don't know if it'll go that.
It wouldn't surprise me if we'd come close because I felt like we were due for a capitulation cycle. To be honest with you, in 2020, we were due for one of those.
Yeah, and we would have gotten one too if it hadn't been for Jerome Powell and those MBS buys.
Right, exactly. Well, I mean, we had one, but it right away immediately.
Well, a week,
about a month, really. But like a month later, a month after that, we were positive. So and then record highs after record highs after record highs. I don't know. I think to me, the big support level, and this is just me, not a CMT, not a just a gut feeling. If I had to pick a support level for the SPX, if I had to, it would be the 2020 highs, right? As soon as it breaks down below that, that's a beast of a support level, I think. So as soon as it breaks down below that, that's the real capitulation. I don't know where the bottom is, but I think it's going to break below that. And I could be wrong. Maybe it touches that support level, bounces right back up.
It's possible. Right? I would see 2020.
Yeah.
That's fair. That's probably not unfair. I don't, my view, and I'm pretty sure I've said this before, is just that I don't see how you can have an economy where no one's working and yet somehow you have the market's hitting all-time highs at that same period. It's like, fundamentally, this does not make sense.
Yeah. And in case you're wondering, that support level is around like the 3,500 level. I don't know exactly I forget what it is. And I'm too drunk to really want to look it up right now, but it's around that level, the 3,500-ish. So that could be a support level. Like I said, this is not financial advice. I'm not making any recommendations here. That's purely a gut feeling. And I've made so many stupid trades that if you're on the other side of any of my trades, congratulations. Like you owe me some drinks. You owe me some bottles of liquor. So not financial advice, but I can give you some advice if you want to look cool. And that is,
and you want to feel cool.
And you want to feel cool. And that is if you go to our merch site.
So drunkenomics.myspreadshop.com.
That's it. If you go to drunkenomics.myspreadshop.com, get yourself a nice black hoodie or an even darker black hoodie.
That's true. You can have both those hoodies. You can have it light black and dark dark black.
And if you want to be cool, you can get one of those hoodies, cut off the sleeves, and go to the lake. Just saying.
And that's how you end up with fantastic sunburns like Aaron.
Gosh, dude.
But if you don't want to do that and you still want to look awesome hitting the links, you don't have to wear a hoodie. You can wear a golf polo. Probably not in black. That's just a heat thing.
I strictly wear white in the summer. Like I have so many white polos just to
you can get that awesome coffee mug for the office. You can get that
dog
whatever you want. You can get that sweet poster like Todd's got up at the I don't know what Todd's bar is called, but I'm going to call it the Toddonomical right now.
Yeah, that's the Toddonomical Tavern right there, dude.
Yep.
So, yeah, man, that's where you can go. Really, really appreciate the support. Additionally, to our patrons, thank you so much. If you also want to be one of our patrons, you can do so by going to patreon.com/drunkenomics. That's patreon.com/drunkenomics.
Thanks
for coming to the rescue there. That was bad.
Look, it's been me enough times.
Role reversal right there. Yeah, well, then again, you've been gracious for so many times too. So there we go.
Maybe it's finally. Maybe that's what it finally is.
So,
but yeah, you can give us some support there. If you've already got too much merch, you don't need any merch. Whatever you decide you're your choices. If you just want to help us keep the lights on, liquor cabinet stocked, the ice frozen, and of course, Aaron and aloe vera.
Yeah. I mean, there's aloe vera, and then there's also like, okay, man, we need garnishes.
Spray. Who am I kidding?
Okay, well, we also need garnishes on our cocktails too, man. Okay,
so don't rub lemons on your sunburn.
I'm not gonna rub lemons on my sunburn. I was just saying that's not a plan of mine. I'm just saying if I had a lemon, I would use it to garnish a cocktail with, not rub on my sunburns that I got from golfing. That's all I'm saying. But moving on. So glad you all could join us. What else do we have to say? Is that it? Find us on LinkedIn. Phil and Kill.
Check us out on the social medias. Look forward to the week ahead. Hopefully we answered your questions. Yeah. And of course,
as evidenced by this, I filled and killed and played chestnut checkers. Here you go. We're seeing it right here.
Excellent. He did. Yeah, that's so Aaron's new thing of 30 minutes in the freezer just to make sure his beer is precisely the perfect temperature.
I put 4 or 5
before he drinks it.
Before I started recording.
I did that once on a birthday, and I forgot one of the beers until the next morning, and it was not my best move.
That's the thing, is you were not playing chestnut checkers, which is why I encourage all of you guys to play chestnut checkers. Don't brag, just say. Remember, it only gets worse until it doesn't.
You know what they say? Tuesday's usually worse. Don't let the dead cat bounce onto you. And
most importantly,
stay drunkenomical.
Cheers, my friend.
Cheers.